Hi, everyone. This is one of the biggest turnaround Tuesdays in quite some time. I wonder if people running for office know about Turnaround Tuesday. Well, if not, they're going to find out today. How's everyone doing? So today, kind of a repeat of yesterday, although, we held this level. I have a little different line than Blake has. Blake has the line up here. This line, we've had a couple tests of it. It held it. Nice candles. Really isn't doing anything wrong since it broke out, rechecked, decent candle here. So perhaps we're going to price in today, before we even know the results of the election, the Democrats taking back the House, which, is going to be somewhat dollar negative. Blake showed it yesterday in his excellent review, and with that slide and tweet from Gellos. And looks to me like people are trading along script. Have the markets down a little bit, 27.35. Doesn't look great. We could get another pullback if the dollar's going to break. Maybe we get some risk off. And don't forget, Blake's prime candidate for any kind of problem is the short side of U.S. dollar yen. And it's hanging up here. We may have had a little stop hunt last night. See how we took out the high from here, and then had a pretty nice reversal candle. I think that it's possible that we try 78.6, but again, this is a red event, and personally, and I've had positions on maybe not in currencies, but pretty much in the equity side and ETFs for months. And I feel flat. I'm flat right now, and it's a feeling that most traders are uncomfortable with, myself included. I have to tell myself that it's okay. Sometimes the right trade is no trade. Hi, Manuel, and that it's kind of an I don't know. I have my biases. I can miss trades. It's very possible. I'll miss a big move going into tomorrow morning or tonight. But you know what? That's okay. In fact, you know what? Write it down to take some pressure off yourself, because making money is one thing, but preserving your health, an important thing to do when you're a trader is control your stress levels. And sometimes just having little simple sayings can do it. I mean, I teach it, but I have to read it over and over again to remind myself that I will always miss trades, and that's okay, because there's always another one around the corner. And it's okay to not know, because eventually something will be more obvious to me and compelling for me to take risk. So, just something, a little self-talk. A lot of this business is in your head. And, sometimes we're our own worst enemies because of, FOMO and all the other things that get in our way. Opportunities are easier to make up than losses. What a great line that is, Bob. Yeah, I love it. Okay, so I've often said, and there's a whole team with ideas, and I'm sure there are some, that I would rather bore you than mislead you and pretend like I really see something when I don't. So I don't see much today that I'm going to do. I might start reacting to things tonight or later in the afternoon, but it looks like we're going to script. And the dollar, we have this bounce back through the throwover, and it's acting pretty lousy. And, there is a possibility for a move down to this moving average. 95.50 was a big area, but so was this 96.20, and we're threatening it here. So dollar looks negative, but all of this can change. I guess the only bullish scenario for the dollar is Republican sweep, and I guess that could happen, and that they hold on to the House. That's all they really need to hold on to. The Senate was always a long shot for the Democrats anyway. Also, the metals are kind of confirming that the dollar could weaken. When gold was doing well without a weak dollar, I was curious to see what it would do when the dollar weakened, and we got our answer last week when we had this action. And I have some lines, and I know Grega was talking about the possibility of 1250 or so. So, right up here around 1253 is a possibility. I'm going to be looking for reasons to short gold, because the whole contention all the way down from this is that this wasn't going to be the beginning of a bull market. Bull markets rarely start with confirmed lows, so you have to go back in history to see that this wasn't a great start. But we saw this low at 1180 after this pullback. Shorts are being squeezed. The commitment of traders report, it's old news. Everyone knows how extreme it is. So we'll see. There's probably some more shorts to squeeze, but also reminds me of an interview that I had last week with, I think it was Malcolm, and he said, and he was talking about the dollar and all the bulls in the dollar. And he said, Dale, and he was addressing us that, sometimes the consensus could be right. So maybe these extreme short positions that we have in the metals turn out to be right. So interesting days. We have an interview with Steve Anton. Steve has recently launched a website. He actually has a record. He has, how we've had Saeed get like, 3,000 views on his interview. Steve Anton gets a ton of views, has a huge following. I think he's much more of a day trader, so there's not going to be a lot of forecasting. But we'll be talking about trading technique and what it looks like the U.S. election looks like from Toronto. So stick around for Steve. And Blake, how are you today, buddy? How's it going with you, my friend?
I'm doing well. It's today is going to be I would assume a pretty slow day. We're pushing some pretty key levels in the euro right now ahead of the midterms. But
it looks okay, doesn't it?
Yeah, well, here's the thing. I'll go ahead and take over. This is not a day for me to chase the market. So between now and this, the New York close, this is not the time you want to be chasing the market. So you got the euro that's pushing up against this resistance. We could, in my opinion, we could probably see let me grab a pen really quick so I can just draw some stuff out for you. We might be able to see, 114.50, so we might push, some stops above this trend line that, that we've been discussing, but I wouldn't be chasing it up here. Now you might ask the question, well, Blake, do you short? Not me. I'm thinking that, what we talked about yesterday, that the Democrats may take the House, not the Senate. I think that's a pretty realistic scenario, which still should lead to dollar weakness. But that doesn't, if I was short the euro dollar or long dollars right now, I'd be a little nervous. But that doesn't necessarily make me want to play counter trend today either. So, for me, I won't fade anything. Like if I think it's moving, but I'm not going to chase it either. I picked up a couple positions overnight. One was the U.S. dollar Canadian short. I picked it up at 30 when we rallied to 30 overnight. We were at 31. Was a high. I told everybody in the chat room last night that that's what I plan to do, and I got executed while I was sleeping. So. Because I know this is a big 618 retracement. The only risk that, the big risk I think in dollars, especially if you're dealing with the Canadian, the Aussie, and the Kiwi, is if we do have like a blue wave of voters.
Those are the only colored waves I've ever seen. I've never seen red waves. Have you, Blake? You've been to San Diego quite a bit. We do have red tide once in a while, but
yeah, I
not
guess
red
you do have
waves.
red tide. Yeah,
Yeah.
no, but the fact of the matter is if we do have this blue wave, if you will, um, which yeah, I don't necessarily think is guaranteed here. But if we do, then we might have risk off. And if we have risk off, does that mean the dollar Canadian goes higher, the Kiwi goes lower, the Aussie goes lower? For that particular reason, if you were if you use ForexAnalytix, you might have noticed that I closed the New Zealand yen pattern in play from last week because we were up at resistance, and I closed it and I closed my long because we were right up against resistance. And if we do go risk off, does this turn here? And we're right here. Maybe something crazy happens, and then we go risk off, and you see the dollar just gets smashed across the board. I don't know. I mean, it's hard to say what is going to happen until it starts happening today. I think you have to, kind of throw correlations out the window, and you have to be very open-minded. Ooh, I'm sorry. I mean, no, yawn on you guys. You have to be pretty open-minded to price action tonight, and I think that's going to be key. This is going to be a long night for a lot of us. I mean, I'll be staying up late tonight. I know Amanda, who's our she moderates the chat room. She's our strong voice in the chat room. She's actually going to go to bed early in Europe and get up extremely early in the morning, which makes sense. Which she says she's going to try to get up at 2 a.m., which would be for us it'd be the evening here in the US, and if you're in Europe and you want to trade this event risk, I think that's a good idea. You go to sleep early and you get up really early in the morning, like 1-2 o'clock in the morning if you're in London, or if different parts of Europe you might be getting up around midnight to 3 a.m. I think that makes a lot of sense if you want to be active for the election. I don't expect a repeat of 2 years ago, of 2016, on election night when Trump won the presidency. I'm not expecting that type of volatility where we just had massive risk on. But in the event that, and I think the likelihood of this happening is very, very low. But in the event that we get, the Democrats taking both the House and the Senate, which again, I think the probabilities are like less than 10%. But in that type of rare situation, we would have some massive moves. I think would be the case. I don't foresee that happening. And if that was, you're going to see equities just come actually unglued, and you're probably going to see the dollar just crumble, at least against the yen, if not against other things too. It's going to be an interesting night, and I think that for the next 12 hours, you don't want to do much. I mean, I'm probably going to clean my house, or do a lot of dishes. I don't know. I'll go outside, pick some weeds, and maybe rearrange my sock drawer. I don't know what I'm going to do, but I'm going to do something where I'm not engaged fully in the market, because the last thing you want to do is get tripped up into chasing the market one direction or the other. That's just it's going to be you can get yourself into trouble. So let's just talk about some of the majors before I give it over to Steve. Now, I don't. Sorry, yawning again. I can't stop yawning. which is interesting because this is like the first week where I get to sleep in a little bit longer than normal. There is the RBA tonight, and that was one of the reasons why or not RBA, RBNZ, the RBA, left rates unchanged as expected, and you see the Aussie, it's pushing right up against resistance. It's just following with overall dollar weakness, but the RBNZ is tonight, which is also a risk for the Kiwi. The Kiwi has held pretty good support though, as long as we're above. I think any dip, even tonight, any dip below 66 cents is going to be a good opportunity to be long. I don't think we're going to get down there, but you have to realize that the Kiwi dollar is actually at risk of a pretty severe break higher, especially if we clear this resistance zone here. So yeah, we get a foothold above 67 cents and maybe even 67 and a quarter, and the Kiwi is going to look really quite bullish. And I don't know if risk aversion would stop this move, because it's been the positioning has been extremely short in the Kiwi. So like I said, I don't know even if risk aversion is going to stop this thing, especially if we have a hawkish RBNZ. So keep an eye on the Kiwi. I still like it, even though I paired off my or took off my New Zealand exposure. I still think the Kiwi looks pretty strong. The pound, really strong move this morning. I guess Rob is is stepping down, and that the pound has rallied as a result, and the cable looks very squeezy. I mean, the pound looks like we're gonna make a move. We talked about it yesterday actually, and I think you have it in your analysis here that we're gonna look like we're gonna challenge 131. End of day, the pound dollar closed near the 618 at 143, which could allow for a break higher back above the 131 level as soon as tomorrow. As soon as tomorrow. That's great typing on my part. But here we are, almost at 131. So it looks like we're going to challenge 131 level, ahead of the midterm elections, and really the cable looks like it could squeeze higher. I mean, everybody here should realize that we have this huge possible double bottom. I'll just mark it up for you guys.
And Blake, we also found the high with a double top, so who knows, huh?
Yeah, you're right. We had a double top high here, possible double bottom. We get above 133, and we're going to trade up towards 139 again. So maybe even 140. So the cable looks bullish. I wouldn't want to be short the cable right now, and it looks like that way against many crosses, which I'm not going to go into the crosses. I'm going to leave that for Steve, because I want to leave something for Steve to talk about today, because I think that's where the action is going to be at. If you want to be involved in the market, maybe trading the crosses might be a better way, at least for the day.
For me, and just like the euro, Blake, it's hard to chase these foreign currencies here after this move from last week, isn't it?
It's really difficult to try to chase them higher, but at the same time, if I was short the cable, I'd be covering. I mean,
right.
That's the thing, is you don't want to get caught on the short side, and then whenever I say these things to retail traders, when I say retail, that's us, but when I say like,
no, not us.
Yeah, we're all retail. If I said,
I didn't know.
If I said I don't want to be short the cable, the next question is always, well, why don't you get long? Just because I don't want to be short doesn't mean I want to be long either. Not being in a trade is also, it can be a good trade. So just because I wouldn't want to be on the short side doesn't necessarily mean I want to be long. Everybody thinks it's either or, like you're always long or you're always short, and that's not the case. Go ahead.
I was just thinking, Blake, that what you showed yesterday and the potential consensus outcome, that maybe what's going on here is going to be like buy the rumor, sell the fact that the dollar's weakening into this event, that perhaps most of it, half of it or something like that, might already be in the market by the time and if we have that result.
Well, yeah, that's why I don't think, you know, I mean, even if we have Democrats take the House and Republicans remain, they hold the Senate, which is the likely outcome, as we all have discussed. You know, am I expecting the euro to go to 118 today? No. Now, if the Democrats take both the House and Senate, we are probably going to be a lot higher tomorrow. I mean, you know, you'll wake up tomorrow morning at this point at a time, and we'll probably be trading over 116 and probably close to 117. The dollar will get just absolutely demolished in that rare scenario. But, you know, I think, yeah, a lot of this is getting worked in and priced in to the higher probability. So, you know, now the flip side is you have to also realize that if the Republicans retain the House and the Senate, which could happen, you know, you have all of these voters. Like I was reading midterm elections 4 years ago was 27 million voters, early voters. This midterm elections is like 36 million or 38 million or some number like that. So it's a significant increase. And there's the voter turnout is expected to be very significant. Hold on really quick. Hold on. I just want to let everybody know here. Okay. So the voter increase, if you know, we're supposed to, we see this big, you know, turnout. Are they Trump supporters or are they Democratic supporters? I mean, we don't know. And like I said, and I'm going to reiterate what I said yesterday. We cannot underestimate the Trump base. You can't. They proved themselves last, you know, the general election 2 years ago. That you see them at the rallies, they are energized. They are, and Democrats are too. You know, you know, there's a lot of pent up anger on the Democratic side too. Are they, you know, are they willing to get out and vote is the question, and no one knows. I mean, I don't believe polls. I think polls, and you just can't believe them. And I think tonight's going to be extremely interesting to watch. And you know, just remember, no trade is okay. No trade today is okay. It's all right not to be in a position right now. And that's it, because there are so many unknowns. But you know, if the Republicans retain the House and the Senate, this euro, everybody should know this euro will be trading down at 110 tomorrow. Well, 110 might be a stretch. We'll be trading below 113 and probably close to 112. Probably like this 127% extension and on our way to 110. So, you know, we'll probably be trading down here like this, down 112, 111.50 tomorrow. So don't think that it's a, you know, it's a you know, it's a given that that this is going to happen. So anyway, I just wanted to say those few things, but let's talk about, so the Aussie, you know, Aussie's up against channel resistance. Look, if it wasn't a midterm election tonight, if this wasn't midterm, I'd probably be looking to short the Aussie at 72.50, and I just put my stop, you know, above the highs from a couple of days ago. I'm not going to do that today. I'm not going to do that because of what I know is happening. But you know, under normal circumstances, I would probably just short the Aussie here, put my stop right there. I mean, that's what I would do. We're in a strong downtrend. You know, the Kiwi is obviously showing signs of life. The RBNZ is tonight. The Swissy just kind of still showing a false breakout here, but I'm not excited about doing anything with the Swissy. The Canadian, the Canadian has good resistance up here at the 618, but you can't get really bearish the Canadian until we drop back below 130. I mean, back below here is where downside starts to open up. Okay, but you also have to keep in mind that that above that resistance, you're going to get a squeeze. The peso, this was a great short. I should have just plugged my nose, closed my eyes, and stayed short this thing. I shorted this thing at 20.40. Actually, I think you can see it right here. Close patterns in play. U.S. dollar, Mexican peso entry area 2038 to 2042, and I closed it at 2016. I should have just stayed short that thing because you could see it's identical patterns here. That was just a really great short, and I played it poorly. The Nordic currencies, Norwegian krona.
We're our own worst critics, aren't we, man?
We are.
Up 1% on a trade in how many days?
Like one. Yeah.
One day, yeah.
Yeah, but still, I mean, that was a extremely obvious position, which should have stuck with it. One last thing I want to go over is just the U.S. dollar, Japanese yen. This is one that in the event that we see some risk off following the election, you got to keep an eye on not only the dollar yen but the other yen pairs. The New Zealand yen can fail. Aussie yen may fail. But notice in the dollar yen, we drew this box yesterday. This is nothing new. I'm going to get rid of it really quick. We hit the 618, we reversed. Last night, we broke above the 618.
Stop hunt.
On a stop hunt, on a Dale Pinkert, pulled a big Dale Pinkert right there and then reversed. So if you are just, this is a big 618 rejection, a little false breakout here. If we drop back below 112, we could see some significant selling, not only in the dollar yen but also in some of the other yen pairs. So I think that this would probably go alongside risk off. So just keep the yen pairs, just kind of just watch those and see how they respond tonight. I think they'll give you a pretty good clue. Last but not least, I'm gonna turn it over to Steve. I did send this out to ForexAnalytix subscribers, but look at gold. Gold is right up against this 1240 again. We have a bull flag pattern. This is one thing that I'm going to be looking at, because if gold does break higher, then that's going to tell me a lot. That's going to tell me that the dollar is going to come under pressure across the board. Cable's moving again. Hold on. I don't see any headlines. I'm looking at Bloomberg. I didn't.
24.
Yeah, we just came off here. Nothing. I don't see anything. I don't know why.
What's a target on that gold from the bull flag? It's about a $20 move or so.
Yeah, but it doesn't really matter. I mean, it does. I guess it does matter, but it doesn't really matter because the reason why is because it would be broken out. So it doesn't really matter. It'd be going a lot higher. So the measured move would be 1253. But once you're up at 1253, it's broken out. Then you don't want to be on the short side. Period. End of story. Because now you're in a situation where you're squeezing past really resistance, the 38% retracement. We'll trade up towards the 200-day moving average after that, in my opinion.
Yeah, we have a confluence of resistances at 1262. So I think that if we get past that, yes, we're definitely on our way there.
So there you go. And you know what, Steve, I'm going to let you show everybody what this quote unquote confluence is on gold. And with that being said, guys and gals, if you have not figured out how to receive ForexAnalytix for free, through our reimbursement program, and you're not part of our community where you're in our chat room where I'm at all day long, I'm there all day. When I'm sitting at my desk, I'm chatting with everybody. And that's just me, not including the rest of the team. Make sure you talk to our partners at Forest Park FX. Steve's got their contact information right in front of you. You can find it right on our website, the reimbursement program. Reach out to them, see what they can do for you. Tell them you're with that you listen to this webinar, and they're our sponsors. It helps us out too. They're our sponsors for this particular FACE webinar. So thanks everybody for listening in to me, and I'm going to turn it over to Steve Stelios and Coach. So thanks, guys.
Good luck
Thank
today,
you,
everybody.
Hey, good luck today. I'll see you guys in the chat room tonight for the elections.
Today is
Okay.
going to be a long day for sure. Yeah,
It
absolutely.
is.
Absolutely. So, Stelio.
Hi, Steve. Hi, Stel.
Hey, Dale.
How are you
Stelio,
guys?
what do you have for us?
Well, it's all dominated by the US, I'm afraid, so not much more happening. We did have a couple of economic data coming out. First of all, the RBA held rates. They gave us pretty much nothing. So that was a big dud. But we did have some PMIs coming out of Europe. A couple were disappointing, like Italian and French service PMI were below estimate, but then German and the overall were above estimate. Nothing to write home about. The interesting thing was that we had the PPI, so Producer Price Index, which came in at 4.5% year on year. And this is consistent with pretty much all other major economies. You know, we're seeing big PPI numbers. If you recall, in Sweden, it was over 10%. And we know that this is a leading indicator, and this eventually gets translated into inflation. So that's something we are seeing in Europe as well now. It's just an interesting thing.
PPI is not so much toyed with. So, you know, I
Yes.
don't think that it's only a leading indicator. I think it's also, you know, a more telling indicator.
Yes.
Besides that, because as you said, it's been showing quite higher. It's been pointing quite higher for quite some time now. If we also want to take into account Friday's data, we had a 3.1 percentage in wage increases, which is also like a big factor of production, right, Stelio?
Correct. Yes.
But the government wants to persuade everybody that inflation is like symmetrically around 2%, which, yeah, okay, sure.
Well, you know what's going to happen if a lot of people start looking at PPI and other related indicators. So they're going to start tampering with those, aren't they? They're going to change the calculation. You know, the usual.
Of course.
I'm a bit cynical, you know, as people can understand.
Hedonic adjustments and every other, you know, toying around with the basket, toying around with hedonic adjustments, toying around with, you know, what kind of a percentage of each you should attribute to consumption, etc., etc. Yeah, the usual stuff. Anyhow, so yeah, an interesting PPI print for sure. There's no question about it. Anything else, Stelio, from the macro side?
I'm afraid not. It's all about, as I said, it's all about the US and the way things are looking. You know, there's a good chance that the Democrats are going to take the House of Representatives. If that happens, then we should see a move in the dollar. But
as I said to Blake yesterday, I don't refute the fact that the markets are conditioned in a specific way, and you know, he was spot on in his analysis yesterday. That, you know, this is the way that the markets most probably are going to react. But, you know, if we want to go to the basics, which is what actually affects a currency and, you know, its exchange rate, you know, Trump has so far produced a record deficit for the economy, a record merchandising deficit of, it was a 33-year all-time high that we had, the last one we saw. Record trade current account deficit. So in all honesty, everything that is currency negative is already there. So I really have no clue why the market thinks that changing, you know, hands of one of the bodies of Congress is going to make any difference on the positive or the negative side. Personally, I think it's going to lead to the same result one way or another. But yeah, in the short term, the markets are going to react exactly that way. And having to do with technical analysis, let's focus on the charts and let's see how things are positioned, because obviously nobody can predict what's going to happen, but we can definitely see what is better placed to see some dollar strength, what is better placed to see some dollar weakness, so we can cover all possible outcomes and see what is the best play in either of these cases. First of all, let me start by saying that we've been saying that, we drew that a long time ago. This is the perfect place for the USD yen to turn lower if it actually wants to do so. If for some reason we see some risk off and we see some dollar weakness, USD yen is at the perfect position to get rejected. The move higher so far looks corrective. I think one more leg lower is very likely. And as I was saying the other day, I would be extremely careful. This is not the place to be buying USD yen. USD yen might as well move higher, but we're definitely on a resistance that has already been tested 4 out of the last 5 days, and it has failed every single time to pass through it, right? It's a confluence of resistances, and it has already proved its significance. Now, combine that with the fact that we've had strong moves lower in the vast majority of the indices, and that at any given point they can, just turn lower and, resume the downside, because, there are possible like rebound scenarios. But as you see, in any case, I still believe that we're not done going lower. So, for example, several days ago, that is what I drew with the S&P, but it never even managed to pass the 200 DMA. So, my bias still remains short, and I have no position. For people that are in the chat room, they know that I had built half a position, and I booked profits actually at Friday's low, because I didn't want to have any exposure over with the weekend. I started thinking, that Trump and the Republicans might want some good news coming out during the weekend, since we were getting closer and closer to the election. So they would want to do their best to look good ahead of the election. So I considered it carefully, took profits on that half of a position I had built. So now I have no position. I would honestly love to see something having to do with indices. I would love to see something risk positive today, because I would love to short again higher, as high as possible, even the 61.8, if we can say it like at 28, 23, that would be lovely. But anyhow, my bias in the short to medium term remains lower. So in any case, if we see some risk off today, USD yen is horribly going to fail that level, I believe, and this time it's going to move much faster than it did the previous time. Now, having to do with the VIX, VIX seems to be in some kind of a triangle. So this is a nice place for the VIX perhaps to also shoot higher once again. But we need to be a little bit patient. VIX indicated that little turn up in the risk because we had that clear divergence. I mean, we had a lower low in stocks, but the VIX actually did not print a higher high. So that was a nice divergence that pointed to the rebound. But in this case, the VIX might just be consolidating ahead of another push lower. Now, having to do with foreign, for people that are in the US stock markets, the DAX hasn't made it back to 11,800. It's more than obvious that as long as we remain below there, you have to keep looking lower. So far, this pullback doesn't seem to be honest impulsive. So, we might push higher towards 11,800, 11,850 once again before lower. As you see the FTSE though, the FTSE turned lower once again. So it definitely remains under pressure, and if it actually even breaks below the previous low, I think that's going to be another nail in the coffin here, because the next area of support then is almost at the 6,600 level, and it's this whole formation up here is going to look more and more like a topping formation. So I think it's a little bit dangerous now. Having to do with the Nikkei, as you see, it has kept appreciating, but we're still under this broken trend line support. So we're currently testing the 38.2. So I wouldn't be surprised. The 200 DMA is a little bit higher than where we currently are. So that's a nice level for the Nikkei to turn lower as well. So that's also well positioned for some risk off. The move higher so far is clearly showing that initially it started with a big day higher, but afterwards we clearly see some characteristics of momentum loss. Now, having to do with major dollar pairs, I'm not going to go over them. Blake has already showed them. They do seem to be well bid, especially the Aussie and the Kiwi. We spoke about them, some time ago. For those of you that actually have noticed, just because I don't remember if we mentioned it yesterday, let me just tell you that we've started a new series of blog posts. They're very short ones. Every night Blake posts like a few words about the chart of the day. So yesterday it was the Kiwi yen. Today it was the Euro USD. So keep your eyes open for that. That's free content. You can actually have a look at it. It's just a paragraph. I can go in so you can have a look. It's like a paragraph and the chart, and CMT chartered market technicians, they post that also. So you can have a look at that every day. You might find something
That's
interesting
great.
there.
And it's good that it's short. People's attention span. We were talking about.
Yeah. Absolutely. So Aussie and Kiwi definitely well positioned for a rebound higher. So let me be very clear. Theoretically speaking, let's say what is the consensus of the market for, let's say, the most bullish dollar and risk scenario? That the Republicans will maintain the Congress, both the House of Representatives and the Senate. So the market considers, and it's very, very likely that if that happens, we're going to get risk on, and we're going to get, that's going to be a dollar positive event. Obviously, in this case, Aussie and Kiwi are going to be a little bit torn, right? Because if the dollar gets bid, but on the other hand, we get risk getting bid, Aussie and Kiwi might be a little bit torn of what they want to do, because on one hand, the dollar is going to try to pressure them lower. On the other hand, they're rather decently correlated on occasions with risk. Sometimes they lead turns. So we have to see what's going to happen in this case. In any case, I think that 7150 is a very, very strong area of support for the Aussie, and I think as a risk-reward proposition, it's very appealing to try your luck being long down there. And Kiwi has already done the move, and as Blake showed, 67 cents, quite an important level here. So I pay very close attention to that, and he has already pointed to the Kiwi yen, which, if you remember, since a long time ago, I was mentioning the possibility of a Kiwi yen having a quadruple bottom, and we're very close to actually getting that. That's something you very rarely see, and that's going to be very interesting to see how it's going to play out. Anyhow, if we want to have a look at the crosses, because as Blake said, if you want to really trade something today before we have the events, you want to trade something that's that doesn't involve the dollar, obviously, and doesn't directly involve that much risk, although indirectly does a little bit. But for that, you want to have a look at the crosses, and the situation with the crosses is quite clear. So let's have a look at the euro crosses and the pound crosses to begin with. So let's start by having a look at the Euro-Aussie. So the Euro-Aussie has obviously had some very, very bad days. You see that the move lower has been quite rough, but this is the second day out of the 3 last days that we are finding support in this confluence of supports. It's the 78.6 of the last move higher. It's also a horizontal support resistance level. So the Euro-Aussie is attempting to hold this level. Perhaps we see some kind of a bigger rebound from here, perhaps up towards 159.60, 160.25. I think that's going to be a good place to be selling again. Same deal. I think that if we just never managed to break above 158.75, which is now the first area of resistance. It's also the 200 EMA. I think that we're headed towards 155.80. So I do think that the Euros is, on a sell the rally mode. It might not even rally more from here. So shorting opportunities in the Euro Aussie look good, and the same goes for the Euro Kiwi. As you see, the Euro Kiwi has stalled at a very nice confluence of support, 61.8, horizontal support area as well. Two possibilities from here. If it breaks down from here, it can move all the way down to 166. Another possibility, if we rebound, the closer we get to 174.30, the better the opportunity to look for one more push lower. So, so far, I'm just seeing a consolidation here. This is so far an inside day of an inside day. This is the epitome of a consolidation. So chances that it's going to resume lower directly from here are quite high. And usually there is a tactic about playing double inside days. It's putting in place some OCO orders. One cancels the other. Once you break above the high of the first day or the low of the first day, you get triggered and you expect to see extension of that breakout. So, this is an old tactic in the rare event that we have double inside days, and in the very, very, very rare event that you might see like a triple inside day. So keep that in mind. Now, obviously, as I said, I would be looking for lower prices even if we see a rebound, but the possibility of directly breaking down from here is quite high. Now, since the pound has been overperforming the euro in the short term, we have already seen bigger rebounds in the pound Aussie, but I have to say that even those rebounds and the pound Kiwi look corrective more or less in nature, right? So even if you look at the pound Aussie, it has performed better than the euro Aussie, for example. So, given that if you want to be short one of the two euros, it looks better at the moment. But even this move higher can be interpreted if you go down, let's say, to a 4-hour chart. You can draw this as a pennant. You can very clearly see it. It's either a pennant or it's going to prove to be like a bull flag. In any case, any move towards 182 has a very, very, very high chance of getting rejected, and then we can see another leg lower. So obviously, pound seems to be overperforming at the moment, so going with the euro is more ideal. But even by looking at the pound equivalent cross, as I said, that also looks like it wants to resume lower, perhaps from a little bit higher from here. And the same if you want to compare the euro kiwi with the pound kiwi. The euro kiwi has had, as we saw just before, a double inside day. The pound kiwi has had a little bit of an appreciation, something like a pennant as well. It found support at the confluence of these supports, the 200 daily moving average, the 78.6 of the last move higher. As you see, this has also been a horizontal support area. So all in all, I think that all of those pairs want to move lower. Now, there is always a chance that they're going to do it from a little bit higher, but I think that any rally that stalls should be viewed as a good selling opportunity. So let's visit one more, which is the euro pound. Euro pound has really messed up with traders' heads. I say that I've stayed far away from it because I don't like this kind of price action. I know how many people were looking to be short or long while the pair for 9 months in a row was trading within this descending channel, and a lot of people were, looking at some, moves and we're believing that finally we're going to get a breakout, and we're trying to jump the gun and be in advance in the right side of the market. That failed them multiple times.
Forgive me.
About what?
Oh,
about what?
For trading the euro pound.
There's nothing to forgive you about it.
All right.
Then we got a break. Then we got a break higher, which produced a rather limited follow through. Then we got like a move lower that up to some point looked very nicely corrective. And this especially, I remember we were here discussing it together, Coach. If you remember, let me mark it. You remember this day here, that I said, this kind of a candle. I mean, look, if a market wants to toy with people's heads, look how easily it can do it. I mean, we got a move lower. So far, so good. Up to this point, it looked corrective. And then it finds support at the confluence of previous horizontal support area and the previous broken channel. And it produces this massive, massive, massive candle higher. And then I'm like, okay, you know, I didn't get involved in this market, if you remember, because I already didn't like that price action. But I was like, listen, statistically speaking, such a move like this one, coming from such an important confluence of supports, you know, the closer we get down to this place, you know, the risk reward is very appealing to see a continuation higher. And, you know, no matter how many times I see such a price action in my life, I'm going to say the same thing, because saying that something is statistically significant doesn't mean that it's going to play out every time. It means that it's going to play out more times than it's not. But in this case,
you know, it's a market of traps, Steve.
Yeah, exactly. But in this case,
you, who has been avoiding it, finally saw something, and that was another trap. Everything's a trap in this.
Yeah, and this was a huge trap. I didn't get involved because I had lost all my interest in the previous price action, but I could have easily gotten involved with that, actually.
Last week's rally looked pretty good, like something was beginning to develop too, and now look at where we are.
Actually, I'm just checking my account. My memory fails me. I did get involved, and I lost like 40 pips. So you know, my memory is really failing me. I had to completely phase that out. So yeah, I actually did get involved, and I lost something like 40 pips here. But you know, it was worth the risk. It was worth the risk. And
Boy,
then
you got a black cloud there on your chart.
Yeah, and then we move lower once again, and we find support here, and we start appreciating.
Yeah, that's what I'm saying. It looked pretty good last week.
Yeah, and then what do? We break above this channel, and I can believe that a lot of people thought, okay.
Yeah, I did.
Yeah, okay, perhaps it was a correction lower. It was a deeper correction than you would have expected, but perhaps we're moving higher from here. And then what happens? Within 2 days, we retrace like 2 weeks of appreciation, right? And now where do we find ourselves? Let's erase all that. Now where do we find ourselves? We find ourselves back at a horizontal support resistance area and the 78.6. Obviously quite an important level. Obviously the chances that if we lose this level, we're going to move lower are high. There is no question about it. But in all honesty, just look at this pair. I mean, so many traps, so many tricky points, right? So who knows? I mean, as far as I know, this damn pair, which is so much influenced lately by tape bombs, etc., might just, you know, do like a 1 day false break below this area, get more people trapped in the wrong direction, and then like snap back again and do its thing. Who knows? I mean, it's honestly, you know, a pair you'd rather stay away. So, you know, it is what it is. And I'm saying that because I know that a lot of people are looking at it, but I'm telling you, it's frustrating, really. And I'm not saying that because I lost 40 pips, because in that same month, I made a killing in everything else. I'm saying it because look at this, so many traps. 1, 2, 3, 4 traps we've had since July. So 4 big market traps since July, and perhaps we're about to have a 5th one. And if you want to take it like, you know, to a very, very short-term basis, you can see that we briefly today even broke below that previous low. So, you know, they took out some stops here. I mean, we briefly, like for a few pips, like probed below this previous low. So who knows? Who knows? Anyhow, let's see if we have any questions. USD ZAR, Euro Yen. Yep, good question. Let's have a look at Euro Yen, Pound Yen, and then I'm going to have a look at the exotics, which we haven't done recently. So, Euro Yen. Euro Yen, in my opinion, it's still a big question of what it's doing here. Let me clarify why. I want to take you to the long picture first before we do so. So, there are 2 possibilities here. Let me take the marker highlighter. Okay, so We had a big move lower. You can see all of it here. It doesn't really matter. Then we have a move higher that looks corrective in nature. Then we start moving lower once again. So that makes it a high possibility that, you know, we will have another leg lower. But then the situation gets more complex because, as you see, in essence, what we've been doing is after moving a little bit lower, we've now been trapped roughly in a range. So roughly, we've been oscillating between 125 and let's say 133. And, you know, this price action here, you know, why would I want to do anything with that? If you want to now look at it in the short term, I can tell you that we're breaking above a descending channel that had kept price action. So, you know, in the short term, it has been rather technical. Why? Because we moved lower in a channel. We then broke below what seemed to be a pennant. We then formed a double bottom. We then broke out of what seemed to be a double bottom, but that was a false breakout. So people got trapped definitely there, being positioned, at the wrong place at the wrong time. Then we depreciated within a channel, and now we seem to be breaking above it and the horizontal support area. So in the very short term, the euro yen can extend higher once again, but in the medium term, as you see, this is simply choppy price action in a large extended range. So personally speaking, since you know that I'm not like a scalper or like a few hour kind of trader or a very, very short term trader, I'm just staying out of it, right? Now, having to do with the pound yen, I think the situation longer term speaking is more clear with the pound yen because this formation was clearly more corrective in nature than the one we saw in the euro yen. Just look at this. This is clearly a correction. So, you know, after breaking below this formation, we retested it once, we retested it twice, we started moving lower, we rebounded, we never even made it back to retesting this broken trend line, but we did retest the 61.8 and we failed from there. So as long as this larger formation remains broken and we trade below it, I think that in the medium to long term, I would be looking for more weakness in the pound yen. Now, if we want to have a look at the short-term picture, quite a strong move lower, quite a V-shaped recovery. In the short term, and I posted it earlier today because it's worth having a look at the 4-hour chart. In the pound, this is the cable. The cable seems to be finding a resistance in what can be an ascending wedge and the previous trend line that acted as support. And the same situation applies here with the pound yen, which is what? We had a false break before because, as you see, we retraced it already. We seemed to be breaking below an ascending wedge in the pound yen. We found support in the horizontal support area here at 147.30 and rebound back in it. But that doesn't change the fact that if we do actually turn lower today and we break below this wedge, and more specifically, we end up breaking below this 147, let's say 2030 area, then I expect that the pound yen will at least retrace towards 146.50, roughly the bottom of this wedge. So there is clearly some momentum loss so far. So in the short term view, it looks like we might actually fail up here. Now, if we don't, the next area of resistance is roughly at 149 to 149.50. Now, let's have a look at a few of the exotics, and we can wrap up with that. Let me have a look, Coach. Who do you have as a guest today? Webinars.
Steve
Scheduled
Anton.
interviews. Steve Anton, yes. Oh, yeah, you've had him before.
Yeah. Steve has a huge loyal following. He's mainly a day trader, and he's specializes in really pinpoint pivots and has a bunch of proprietary things. So looking forward to talking to him.
Okay, that sounds actually very, very interesting. I'm not going to look at the USD MXN because Blake has already done so. So let's have a look at the USD ZAR first. And this is what we said some time ago for the USD ZAR. This is one more chance for the USD ZAR to actually produce here a head and shoulders formation I wouldn't want to see that getting prolonged even more because we're going to lose symmetry completely. But I can tell you one thing for sure. We're currently testing, about to test support once again. If USD ZAR closes below 14.05, let's say, I think that's going to constitute the major break, and it should find some significant follow through in the days ahead. So this is what I would be monitoring in the USD ZAR. I think it's quite clear. We either hold or rebound from this level, and that's a key area in the short to medium term. Now, having to do with the USD TRY, we said multiple interpretations here, but in any case, we see a very decent correction here. In any case, I think that this is a corrective move lower. Why do I think that? Because just by zooming out in the chart, you can see that it's been a very, very nice snapback. It didn't end up being a triangle. Be very, very careful because I think it's going to be very hard for the USD TRY to make it below 490. So the closer we get to 490, the better the risk reward to be looking for more upside in this pair. Now, having to do with the USD ruble, clearly a nice move higher, posted the triangle. This triangle acted as you expect a triangle to act for. How is that? Produced one final thrust, tested a very nice fib level, the 50% fib, pushed lower, creating a triangle. This looks like to me, and I think the pattern is quite clear. I think the chances that this triangle is going to get resolved to the downside, so at least we can produce one more leg lower, like this, right? Quite a high chance. So I would expect that this triangle has high chances of getting resolved to the downside and high chances of seeing one more push lower. In this case, I would be looking 63.70 is the first area of support, 62.20 another area of support, and in the longer term, why not? We can go all the way down to 60, 30, 60, 40. Okay, so USD ruble, I think technically speaking, USD ruble and USD ZAR from the pairs that we saw, they seem quite clear to me. Now, one thing I forgot to mention is crude. Crude has now broken below this confluence of supports as well. It has already posted 6 consecutive down days. The last time we saw that, I think, was like 7-8 months ago, and that says a lot. So be careful. We retested this broken area of support as resistance yesterday, and we failed. So we might see one more leg lower in crude. So crude, remains weak, and be careful. Don't yet try to pick a bottom, right? I mean, you might get hurt. So that's it. Enjoy the interview, coach, and as we said before, this is going to be a long day. I'm going to wake up in the middle of the night for the polls. I know that Blake is going to be up. We're going to try to cover in the chat room, the market reactions, even in the middle of the night. It's going to be a special day for sure. So see you all later, and we'll keep informing you with, updates, alerts, and whatever else is needed. Bye-bye.
Okay, Steve, thank you very much. Also, what makes today special is having Steve with us. So, hi, Steve. How are you, buddy? I'm going to make you the presenter. Looking forward to talking to you. Appreciate you coming back.
Which screen you guys seeing?
Right now, I'm seeing the Let's Get Started, Connect, Go to Webinar.
All right. I'll put
now
my
I'm seeing your website.
Okay. What do you guys want to talk about?
How are you today, Steve? How's that?
I'm good.
Let's start there.
Going to be a busy day today. Looks
yeah,
like.
what the Canadian people saying about the U.S. midterms? Are they pretty united and still kind of upset with how they were treated during trade negotiations? I don't like to get political, but I'm curious.
It's booming down here. Still.
Yeah.
I think
in what ways?
Real estate stuff. I don't know how
it's coming back.
Went back up, but everybody's building. Everywhere you go, you see crane. It's booming. I haven't been here in 2 years. Came back last month, and that's all I see. Sky,
Okay.
cranes in the sky.
Growth.
Yeah.
Growth.
Yeah.
Okay. So
Oh,
I see your new project here. It was launched, and I know that you're mainly day trader, Steve. But you know what I like about your style, and you brought it up when we first met and did an interview. Is your pet peeve was people aren't telling others in advance what they're looking to do and if it works. You're always hearing after the fact, yeah, I bought it here and I sold it there, and
yeah.
instead of prepping people. And I saw a tweet of yours, you were looking to do something the next day for a day trade, a scalp in the S&P. So, really, even if you're a day trader or swing or position trader, one of the most important things is to prepare yourself and be ready if the conditions meet your parameters to take the trade ahead of time, right?
Yeah, you need to do your homework. That's for sure. And having a site actually forces you to do it every day. Sometimes I'm way tired though. I just, oof. Like last week, oh man, I missed a lot of my videos because tell you, Dale, I couldn't even go to the bathroom.
Yeah,
It's just crazy.
are you trying to run it like a one-man show? It's very difficult to. You need a good team, Steve. If I could give you any advice,
Mm,
and I see you're trying to build one, by bringing in other guys that know how to see markets and help markets. But yeah, very, very tough to run a business on your own
very
nowadays. Yeah,
right.
and have a life. And I know you want to have a life. You're married,
Hmm.
and you don't want to, be stuck at your workstation all day, do you?
No,
Okay.
it's already taken its toll.
Yeah. Well,
But
so what are you doing to, I talk about this too, Steve, the stress of being in the business and managing it and taking care of your health.
yeah,
It doesn't make any difference if you make hundreds of thousands of pips if you don't feel good. So,
that's right.
do you have any kind of regimen you do to stay in trading shape? Boxers have to be in, boxing shape, and I think as traders, we have to be in mental and good physical condition to do this.
I go on and off. I love food.
Yeah,
I love pasta. I love bread. So that's
yeah.
one of the things. Uh, yeah, I go off and on. It's just
With
I enjoy going out to restaurants. I go to a restaurant every day. Like
okay,
around one, I go to a very, very good one that I missed in Toronto. I go every single day, and
okay.
I have
What
a
is it?
chef
Is it
is a very
Italian?
it's Italian, yeah.
How did I?
He
How
cooks
did
me
I?
a penne arrabbiata with sausage, and I love the dish. I can't stop eating this thing. But
Yeah.
health is definitely very important. But that's on my list. My wife is really giving me shit. She goes to the gym 2 hours every day. She
Okay.
Yeah, she's a trainer and stuff too, so she's definitely fit. Me, on the other hand, uh, no.
The other way. Well,
I
you
gotta,
balance each
I
other out.
gotta get involved. You know, I walk with her and it's like, look at this one, and they look at me and say, "Who's this fat guy?" But anyways,
Yeah.
besides that,
Yeah.
you get
So,
comfortable. You know what I mean? But
yeah.
you definitely, health wise, you definitely have to. So that's the thing with me. What happens is when I set my target on something, I end up doing it. I kill it, but then you know, trading, you're sitting down, but definitely you have to go to the gym again.
Yeah.
Mm.
All right. Well, you're going to be held to it because you said it during this interview, and I'll just keep tweeting it every
Well, it's not
day
just you, it's
until you
my
get
wife
to the
too. Don't
gym.
worry. My
Yeah.
wife's stuff too.
So,
So
let's talk a little markets here. So,
sure.
this election's coming up, and, a lot of people have, their scenarios. If, the Democrats take the House back, what's going to happen, dollar wise and stock market wise. And I know you trade like to trade energy products. They've been in a pretty consistent downtrend. So what are you looking to do tomorrow morning after the dust settles in the election? You have any things on your radar for tomorrow?
Well, I'll put this. I was on another site. I called the Trump win and I shorted that whole Trump move. I called circuit breaker and I got it right to the circuit breaker.
Do you mean the buy at the bottom, you and Carl Icahn?
Yeah.
Huh?
Yeah, it was right on a form. Everybody here that's listening that knows me on that site, tweet it. When I tweet this interview, tweet to confirm it. But
Okay.
I actually got everybody to go short. Everybody followed. Everybody made a killing that time. But
oh yeah, you okay? So you made it on the downside.
made it on the I started.
Okay.
I started adding like a madman because there is something when my pivots get sliced. You could see that there's something bigger happening. I've talked about this in my course, and it only comes once in a while. But when you see that kind of flag, it means there's heavy duty selling going on. So just pile on, you know. And those, I look for those. I actually dream of those. I don't think we're gonna get one today, though. I don't think.
No, because that was kind of like you know, I can't remember the last time I saw S&P's lock limit down. It reminded me of my days when I used to see it all the time on the floor in the belly market and cattle market, limit moves and lock, and then people can't get out. And I thought maybe the pools would build up, but it wasn't a bad buy down there either, was it?
No, I sold way too early though. Way
Okay.
too early. But
All right. Well,
but I remember
how do
that. So it was crazy.
so
The
how can you
crash
be
to the upside? Never
how
mind.
can you be perfect, Steve?
No, you can't. You can't. Not when it was moving like that. That was just dynamite. That was crazy. That bounce.
Yeah. But you
I
see,
remember.
but we still go back to where we made a windfall profit trade, and we still say I got out too soon. Do you
Yeah,
find
of
that
course.
in yourself? You know, even in victory, sometimes
Hmm.
you don't enjoy it because you could have done better.
Oh yeah. I don't get mad at that. Years ago, I stopped. I guess that comes with experience, right? Then you just get used to it. And
Yeah.
there's always another move. There's always another trade. And anybody that feels that way, I don't think they're ready to trade yet because that gets you to chase moves and stuff. And when you start chasing, that's when you get hurt.
Yeah.
I tend to wait for price to come to me. And you know what? 9 times out of 10, it does. Just wait. And,
Yeah. Tom Petty, the waiting is the hardest part.
what sucks is when you miss a move by like 0.25 in the ES, which happens to me at least twice a week.
Mhm.
And then
I
it
mean,
just
you have
goes the other way
leftovers
hard,
in.
and you're like, oh man.
So do
Anyway,
you ever when you're there, instead of waiting to get filled sometimes and you're unable, just go to the market if you're there?
no,
Okay. That's
I don't.
discipline.
I
Okay.
don't. Maybe you did it like once or twice before, but like I said, I don't like to chase. I'll move it up, like, oh, it just missed. It depends. It depends. But most of the times I wait for it to come get me.
Okay. So
Or
you
I
wanna
it
you
retraces
wanna
up.
you wanna
I'll wait.
show people who are watching it, it'll see it later, just your charts are beautiful, what some of your charts look like
I think I had some.
with all
They're
those
on-
bands, your proprietary bands that you use and so forth. I'm just trying to help you make a nice commercial, buddy.
Here's one right here. Well, I have a daily video online. Here's one
Okay.
overnight I gave, and I gave it from here, 27.45. I took the short,
Yeah.
and there you go. I would have been
Nice.
out at 27.30. I usually
Okay.
front. So this is I'm already out though for the interview. I got out, but
Okay.
this is where it hits, right? So if this breaks, this A pivot, we're gonna go here. Very high probability it hits here, but this is in my daily video, like I
Okay.
just did yesterday. So anybody who took that short, you made money. I'm looking for a move here though. 27.12,
Yeah.
line in the sand. makes a higher high here if it gets defended, which I think it will. And then I'm looking for a pump, believe it or not. I'm looking for there's a bullish setup. There's a bullish setup here. There is actually a bearish setup too, but there's both a bullish and a bearish setup. But
I believe that.
Considering how the boys like to play, I'm looking for a pump and a dump.
New highs or failing rally.
Pump maybe just to trip stops above 2,800, and then when the Republicans win, because I think the Republicans are going to win, and everybody's going to pile on long and then slaughter them. Why?
Okay.
Because I think the Republicans are factored in. I think they're being factored in, and I'll tell you why. If you see those green bars on the ES daily, you know, a lot of these guys have polls. You know, a lot of these hedge funds, they have their own voting systems, and I'm pretty sure they're much accurate than the news voting systems. They have the inside. They know what's going on. So I think Republicans are going to win. I think you're going to get a major move to the upside. But I gave this chart last month. I told them there's a danger move here when this A pivot broke.
Right.
I put the tweet up on Twitter, but members wanted me to delete the tweet. Some people got the call. I said, danger, watch, big move coming. And here it was, right?
Right.
I didn't get my T. It just 8 points away from it, but it's still alive. As you can see here, the A pivot got defended, right? Right to the tick. So this chart is still in sync. This target here is still alive.
Okay.
But considering my bands are pointing up, this band's pointing up, the 200s here, it can get to 2,800 here. It can get to 2,816. And this is still being.
I see a 2824 pivot.
Yeah.
And then an upper blue band part of it coming in around there. You see that blue band you have up there?
Yeah, this could still be synced, even if it's up here. Yeah.
Cool,
it can
man.
Be here. So you know the volatility, right? You hit it here, and then here, up and down. But look at these bars, right? So you got a nice move coming up.
Nothing bearish there.
Yeah, it is bearish. It's still bearish.
Well, I mean the green bar is going up. Yeah.
Yes. So as long as it's above my purple here, right? As I talk about a lot. See when it took the purple out? You see it?
Yeah.
Takes it out to the upside, right?
Yeah.
Defended here. This chart's in sync because why? Look at those tick hits, right?
Mm-hmm.
The pivots. Look at that. Hit, defended. So it's in sync. This, to get disregarded, you need a close above this sync, 2824. You get a close above this, it's going to probably get the new highs. If we get a close above this. A close below this, danger.
We'll take out the February lows. We'll go to like what, 2400s, 2300.
Quick, probably pretty quick too.
Yeah.
We'll get a little bounce and then a murder probably overnight. So
let me ask you this, Steve. I mean, before October, you know, when volatility started to pick up, the S&Ps have become a scalper's dream, haven't they? Now with this kind of market action, and before it was two-way, huh?
Yes.
Go ahead.
Let me. People that are trading this, and I like my members, which I closed right now. There's only a few. I kind of screamed at the top of my lungs to don't trade if you don't know what you're doing, because in volatility, the way I trade it is I look for extended moves. I don't look for 5-10 point moves.
Right.
Not when volatility hits. You'll get crushed. You look for extended 30 to 40 point moves. You know, in between pivots. For example, 2707, 2765. That's an extended move. Or I'd narrow down to an intraday time frame, 30-minute, and I'd map pivots that are 25, 30 points apart. So that's the problem with day traders. Everybody's like, oh, I love this. And they start trading and they start getting chopped up on 5-10 point moves. You got 15 point moves in 1 minute sometimes.
Mm-hmm.
You know, that's what ES used to trade in 1 day. You're
I
getting a
know.
move in 1 minute, back and
Right.
forth.
That's why I
So
said it's become a trader's dream if you know
yes,
how to handle it. How do
exactly.
you manage risk with your methodology?
I look for those extended moves, and I look for like the pivot not to be broken by a certain amount. Now, of
Okay.
course, things can change where the stochastics and all the some other indicators I use and say, look, this thing's gonna get pulled, and I might hold. And if it goes against me, what I do is I'll add to my position at another pivot, and then it comes back. Let's say it pulls back. I take half down right away so I can break out even when I add
Yeah.
to a position. So I like to
Okay.
get out at entry if I'm wrong. I'll add at a lower pivot. And if that pivot breaks, I'm totally out of the position. I take the
Okay.
hit. But
Okay.
it works when when I add, I get out at entry and then I leave the position that I had before and let it run. But if that pivot breaks where I added, I get out.
I like that.
For me. Yeah, I do. I get
Yeah,
out. I'll
because
take the hit. I don't care.
I mean, you do hit things on the button, but there are times. I mean, for me, it's the exception, not the rule, where I get in and there's no drawdown and the trade works right away.
Mhm.
But I like the scaling idea, and then you know, cutting that position and letting the original go. That's really a pearl, Steve.
Yeah, a lot of people add and they just let it go because they think they're going to win the lottery. You know what I mean? It's like,
Yeah,
look, I'm not here to get rich overnight. I'm here to take little chunks, make a paycheck, and I'm happy.
and go to the restaurant.
Yeah, that's basic. Dale, I make one or now honest. Okay, with the volatility, it was like a couple more, but I tend to make 2 or 3 trades a day, if that, if
Yeah, that's
maybe
active.
even one. Like
To
I
me,
know,
that's active. To
yeah,
others,
it is.
that's not,
It
huh?
is. It is. And it's usually in on the open
Yeah,
and one in the afternoon right before 2:30 and right after and the close. So in the morning, afternoon and close. That's it.
right.
Other than that, I'll leave my desk at 11 sometimes. Right after 11, I'm like, I'm out of here. I know till from 11 till 1:32, it's dead. There's chop.
Yeah,
You just know because you got to watch screens, right? That's the
right.
problem there with people. They don't watch screens. So these guys tend to come, I'm a trader. I'm gonna do it. I'm like, yeah. How many have you watched screens? Oh yeah. I watch 2 hours a day. I'm like, well, that's not enough. You gotta watch your screens. You gotta
Yeah,
watch how this market moves. Just doing your homework, looking at the screens is one thing. You have to actually see it live. You
yes.
know what I mean? How they
Screen
like to
time's
trade.
everything, you know.
Yes, it is actually.
In our
Yeah.
business, it's like, and you know what, Steve? A lot of people that, most of the people that I talk to, I ask them, well, how long did it take you to, really have epiphanies and become consistent and make money in the business? And most say 4 years.
Yeah,
So
I,
if
I
people
can.
have unrealistic expectations, that's 4 years of screen time, intensive screen time, to get the feel for how markets move.
Yeah, especially and how, each market moves differently, right? So, and there's another thing. Everybody likes to trade like 5 products. Like, why? Personally, I like one, 2 products I like. I like ES and oil. If
Yeah,
if ES is not moving, I'll just strictly oil likes to move all the time. I like it. I like things that move, but you don't have to trade 5 things. Like what? Why? And then there's people that are married to positions like gold. Gold hasn't been moving for months. And
yeah.
everybody's asking, "What about gold? What about gold?" I'm like, "Who? What about gold? Who gives a shit about gold? Move on." You know what I mean?
Yeah.
So people get married to positions. You can tell that they kind of need more experience. Me and I can see in you
Do you
as
have the
well. We don't
patience?
really
Let me
care.
ask you, buddy. I know, I kind of know you after talking to you for a while. And when you're teaching people, and you have a course, so I know you um, are you a patient guy? Because it definitely takes a lot of patience to teach.
I am patient. I am, but as I haven't taught before, I don't know, but it's tough for me. But I kind of I'm kind of more to the risk side because I used to be one of them on forums and I know what I want. And one of the things that I wanted was, a lot of people want you to hold their hand. A lot of people want stuff on a silver platter. And unfortunately, if you guys are listening, that doesn't happen in this market. You have to put in your work. That's why I force people to actually understand why a trade should be taken. So a lot of people want to know what the trade is. But I feel that those people that want to know that don't put in the work are the ones that blow up their accounts. That's why 95% of the people don't make it in this industry. It's because 95% of the people out there are too lazy to learn why a trade was triggered. And I'm sorry for saying that, but I believe that.
Well, brutally honest, and that's why there are signal services and money managers. And I think it's really a good question to ask is, are you only interested in pips, being poured into your account? Or are you willing to do the work so that you're self-directed?
Well, I'll tell you about signal services. They work. Okay. You have a trade that you give. You don't know what that person has in his bank account. You don't know how much contracts he's trading. You don't know whether he's trading ETFs. You don't know how much leverage he's using, which you probably suggest to him not to leverage up. Most don't listen to you because they think that, I'm trading. Dale knows what he's doing. I'm going to load up here because Dale's buying, and I'm going to make a killing. And that's what they do.
Yeah.
And what happens is they don't know how much contracts or what you're trading. So signal services, of course, they work, especially if the trader's good. But a lot of these people that follow these signal services get cleaned. Why? Because number one, they don't know why you took the trade. Because you can't go when you're in a trade on your site, guys, I'm moving my stuff. You're looking at your screen. Like the last thing you want to do is, you're focused on your trade. You're making sure everything's being lined up. For you to constantly coach and manage hundreds of people that took your trade, it's impossible.
Yeah.
So that's why I tell people, if you give a signal, why don't you learn how Dale took the signal?
Yeah.
So
the whys, so they can repeat it. They can repeat it themselves eventually without being dependent upon anybody.
Exactly. You give the signal, they say, oh my God, Dale, I see why he took the signal, right? And he can manage the trade himself instead of you managing it, because you know as well as I know, Dale, these markets could change on a snap, right?
Everything. Anything can happen.
Exactly. So they need to know when to get out if you're wrong or I'm wrong or anybody's wrong, because you're not going to get, you're going to have a streak. You will get a streak, but you're going to have losses. And if people can't accept losses, then you know what? Pack up and stop trading, because you're not going to make it. Definitely not going to make it in this. You're going to need to experience losses and, pain sometimes. You're going to get pissed off. You're going to get stressed out. That's part of the journey of being a trader. I never.
Yeah, you have to live through adversity, and it's bottom line, Steve. You can't learn experience. It only happens with the passing of time and living through stuff.
100%. A lot of people just think they just dip in, they're gonna make it, or they're listening to a guru. Like, I don't consider myself a guru. I hate when people call themselves gurus, because in this industry, it's just there's no.
I like coach. I love coach.
Yeah.
I mean, that's what I do.
So, I like.
I'm a player coach, though, man. You know how some guys retire and they only coach, but there's some guys that are still playing and coaching. I'm a player coach.
Nice.
So
you'll miss it if you're not playing.
Yeah. You know what, Steve? What a great way to start the month and on election day. And I love that you're just bottom line people. You got your gut level. You're real. And that's why people love you and flock to you. And, I wish you tremendous success with your new venture, and that you get to learn to manage your time and it doesn't absorb your whole life, and that you start going to the gym with your wife and once in a while. And, glad to call you my trading warrior brother, Steve.
Well, thank you, Dale. I think this is like our fourth or fifth. I don't know.
Yeah.
Well, I'm having a podcast, Dale. I'm gonna bring you on. I got
Okay.
my here. I'll tell you. I got. You know what? You want to hear something, Dale? A
What?
buddy of mine gave me this marijuana stock back then. He's
Okay.
I'll show you something. Don't buy it now, guys. Whoever's listening,
Oh,
I'm
yeah.
not promoting this stock. I'm just so my first one, which I had to change the date because I didn't do this because my membership's closed. As my brother, we're going to talk about real estate on how we acquired 100-unit buildings,
Cool.
which we have 6 now. But this is I'm going to bring him on, and this is Anthony, a good friend of mine, who he's now the vice president of a symbol called Huge, which is the marijuana stock. He gave it to me for private placement at 5 cents, eh? And I don't do penny stocks, eh?
Right.
He was telling me, we're big, we're growing, we're going. Went to 90 cents, Dale.
Wow.
Yeah,
When it went public?
oh,
You mean when it went public? The IPO.
yeah. Well,
Oh, yeah. Nice, huh?
Not just that, they all did. All these guys here, I'm
I know.
telling you, some people I met here, they became millionaires. A friend of mine's sister put $1,000. She made $1 million from
Unbelievable.
1,000. She got it at 19 cents and went to $18.
Wow.
Well, they
Yeah.
don't sell these people because I would have been out like as soon as it doubled.
I know.
That's the way we are. We're like, we're out.
Yeah, well,
Take the
yeah,
money. I'm out of here.
I've always said, Steve, for someone to make 1,000% on some of these things, that you
They
either
don't know
have
what
to
they're
be
doing.
naive or greedy, one or the other. Because I can never do it. You know what I mean? I'd never.
I know. You can't.
I mean,
can't-
you just think it's, you've seen things, you've been around too long to know that, it can disappear. So, great talking to you, Steve.
Great talking to you too, Dale. I'll let you know when I'm gonna go live with that. Like I said, I didn't know it would be this. The site is it's very, very time consuming. It's kind of
Yeah. Well, you and your
kind of
family
regretting that I did it, though. But anyway, I'm not regretting it. I like helping people.
If I don't talk to you guys, you and your family have a great holiday season.
Oh, you too. Stay safe here. And
okay, and appreciate you taking time out of your day to address us, and lots of luck with the site. Anything I could do to help you, let me know. Okay,
definitely.
buddy?
One question, Dale. Who are you voting for?
Well, I don't want to get political.
I know. You don't want to get political. I knew you were going to say it.
in this business.
I don't want people to hate me. You want to hate me.
Yes, but good try. That's all I can say. Good
I think
try.
I know who. I'm going to keep it quiet, though.
All right, buddy.
Right. We'll talk
All right,
later,
everyone.
Dale.
That's Steve Anton at the Pivot King, and you can find him on his new website, thebesttraders.com. Is that correct, Steve?
You got it.
And everyone.
Membership's closed, though, guys. Membership's
Oh, yeah,
closed.
that's right. Yeah.
So just fill out a form, and I'll let you know when it's back up because.
Yeah, get on the waiting list.
Yeah.
To pay Steve. That's how you know someone has something good, when they have a waiting list. All right, buddy. Take it easy, Steve.
Take care, Dale. Ciao.
All right. Cheers. And
Cheers.
Everyone else, thank you and good enjoy today. And don't just count your pips, count your blessings. See you tomorrow, and we'll see where the dust settles. Adios. Thanks again, Steve Anton.
Cheers.